Okay, well, thank you very much for joining me on my second Making Tax Digital video. In the first video I explained what they were doing and why they were doing it, but now I just wanted to give you a bit more information on how it might work. No one's certain at the moment, but there have been a few indications of what the new system will look like. So at the moment, HMRC has a lot of information, but it still asks you to provide that information. A good example of this is an employer might submit a P60 for an employee, and HMRC will have all that information on a P60 document in terms of how much that employee was actually paid during that year. But then, for whatever reason, if that employee then has to go on and do a tax return, maybe they've got rental income or some other sort of income that they need to declare, they'll be asked all over again to provide the information on that P60. So what you've got there is a duplication of information that HMRC is requesting, but also it can lead to human error as well. So what HMRC is doing is they want to move to a system whereby your banks submit information about the interest they're paying you, your pension providers submit information about any pension contributions or payments made to you. They want to essentially link everything up. They want to be able to take the information that they're already receiving via their payroll software and payroll returns and then put that directly into self-assessment. So all these things like dividends, savings, payroll, they're just a small part of a company's tax affairs. The other big part is how it's actually doing in terms of its accounts. One of the things that the new system will do, and they're looking to introduce it by about 2020, is for a lot of cloud-based software, these cloud-based software products will connect directly to the HMRC system. So what it will mean is, as small businesses are doing their keeping their records up to date every week or every month, then what they'll have to do is submit a quarterly return, a lot like a VAT return actually. And when they submit this quarterly return, it will tell HMRC how much profit they've made, and also then they'll be asked to pay that tax quarterly. So there's a few advantages of this. At the moment, a lot of businesses do get caught out by tax bills. A lot of the time, they can work for a whole year and that tax bill isn't due till 9 months after that year end. So by then, if there's any cash flow issues, it can be very difficult to fix them. So this will hopefully eliminate that. It will also give small business owners an opportunity to stay on top of their numbers. So instead of reviewing their figures like once a year, maybe they'll be reviewing them every 3 months or every month, and that means they'll essentially be able to run their business better as long as they understand what those figures mean. I'm going to turn this two-part series into a three-part actually, because I've just noticed I'm running a bit behind on time. So stay tuned for my next part where I explain some of the advantages and disadvantages of making tax digital.